The U.S. may still have a long road ahead in its economic recovery. Federal Reserve Vice Chair Rich Clarida telling the Institute of International Finance today that it could take another year or more for the U.S. economy to get back to its pre-pandemic levels. Joining us now for more, Henry McVey, head of global macro and asset allocation at KKR. Thanks so much for joining us, Henry. You have less optimistic views like that from Rich Clarida. At the same time, you also have a different approach by the Fed, which is less tied to holding its inflation target now. What's your view as to whether or not we will get more inflation than expected in the next couple of years? And if so, what's the best way to be positioned for that?
Great. Yeah, thanks for having me. I'd say in the near term, the bigger risk is deflation, not inflation. We got a CPI print this week, and besides things like used cars, you're really seeing a slowdown in services inflation. So that's the near term. I think the Federal Reserve is very focused on that. That's why they changed their policy. I think what we were highlighting to investors in our latest piece is just that, if we've been in an environment where it's been absolute risk on, the Fed also gave an important warning bell. You had one Fed governor dissent, and they talked about financial stability. And what they're trying to do is make sure the money gets into the economy, but maybe not as quickly into the markets. I think they're happy with where the markets are. Financial conditions are easy, credit spreads are tight, and valuations are fair to full, depending on your metric. The KKR, we continue to talk about this as a square root recovery, which is we have a big jump up and then we have a more modest growth. And I think I was listening to you and your team earlier, and that's what we're seeing, which is, the rate of change will slow as we go into the winter. Cases pick up a little bit. Our base view, though, is we've already had a recession. We're going to have a recovery. We want to be invested in that recovery. Through June 30th, we've invested about $30 billion globally around the world on behalf of our limited partners. And that's been to really take advantage of some themes that we think are really important. And I can get into those. But, our view is there will be a recovery. There's more stimulus coming, regardless of which administration. And when you look outside the U.S., Europe's got a much better game plan than they did after the 2009 downturn with the reconstruction fund. And when we look at Asia, we're the largest player in Asia in the alternative space. We're seeing a lot of recovery in China, and that is now extending into things such as services. And you saw that in the data over the last week, where during their Golden Week, you saw domestic flights pick up, hotel usage pick up. And I think there's some encouraging signs for investors that those trends ultimately will come to the U.S. and to Europe.
Shepard Smith here. Thanks for watching CNBC on YouTube.